Hi everybody, it's Thursday, September the 15th, and welcome to Mortgage Straight Talk for my Bank of Canada update and overview of the marketplace. But before I get into that, if I'm standing up here with my chest sort of pushed out a little bit and a little proud, I'm going to make a little announcement. But first of all, this is for all of you parents who have young children and for all of you people who happen to be grandparents. I want you to understand the job of a grandpa. So I'm a papa to Kaylee, my 4-year-old granddaughter. And it's absolutely an amazing job because as a parent you often don't get the time to really enjoy your kids because you're parenting, you're disciplining, you're taking them here, you're taking them there. But as a grandparent, it's great. I don't have any of the responsibility. I can enjoy my granddaughter as a little person and I learn so much from her. And it's my job as grandpa to wind her up and send her home. So I don't make any excuses for that. So if you people are out there the same thing with a grandma or a grandpa, and grandpa winds them up and sends them home, I want you to know that's your job. This morning, actually last night or this morning, at 11:57, Chris, my son, and Stacy, his wife, had a little boy. And he was born 27 minutes from the time they got in the hospital, so he was like my daughter. He was in a little bit of a hurry to get in this world. He was 2 weeks early, 7 pounds, 8 ounces. Keenan, Marty, Brian, Matthey. So I'm a proud papa now of Kaylee, who's 4 years old, and Kaylee's going to be a big sister. And we now have little Keenan, who's joined our family. So I'm a proud papa. But that just a tip for you guys to know, papa, that's my job, okay? So if you get frustrated with your grandparents, just think of me. I get a chance to be the idiot that I want to be with my granddaughter, and sometimes to the chagrin of my wife, but that's the fun part of being papa. So, anyways, an update. September the 15th today, the last Bank of Canada update was on September the 7th, and I look for clues in the Bank of Canada updates to see what's going on, and I think I've told you previously that things looked pretty good from the standpoint of variable, and they're still that, and the biggest clue that was in this update was the need to withdraw economic stimulus has diminished. So before, at the beginning of the year, when they're saying they think things are going to ramp up a little bit and inflation's going to take off, that stimulus is now pretty well gone because there's a lot happening in Europe that's affecting global markets. The second quarter growth in Canada was a lot slower than they anticipated. Inflation is well within their target range. And so the Bank of Canada has basically said, you know, for the time being, we think rates are going to remain right where they are. And most economists are saying that's going to happen probably right through into 2012, maybe all of 2012. So those of you who are in variables right now, absolutely great shape to stay there. But there's a lot of other developments that are going on right now, and I'm going to highlight some of those. First of all, variable discounts. Back in, prior to 2008, we had discounts from variable from about prime, the lowest was prime -1. Those discounts disappeared in 2008 in the credit crisis, and they went to prime +80. And since then, we've sort of clawed our way back, and we had discounts recently of prime -80 on variables. But recently, the banks have started citing that the cost of their variable rate mortgages has increased, and we have seen prime discounts now reduced down to prime -0.5 or less. And in fact, one lender came out this morning and reduced their discount to prime -0.25. We still have one lender at prime -70. So we're seeing some pressure on the discount side of variable rate mortgages. So for those of you that have significant discounts on your variable rate mortgage right now, you're in great shape compared to where the market could go. Now, that's going to impact things in a different way. Let's talk about fixed rates. In the spring, there was a spring forecast that we were going to see rates going to increase significantly. And right now, what we're seeing is, in fact, the total opposite. In fact, we're seeing rates now that are going to have gone past the lows that we had before. And the other interesting thing is I've told you in the past that how fixed rates are normally established is by a spread over the bond rate. So if you take a 5-year bond and a 5-year mortgage, that spread was normally, historically, about 1 to 1.2% over that bond rate. In 2008, that spread significantly increased, and it's again come back down again, where the spread normally is about 150 to 170 over bond. But what we've seen recently is that spread actually has gone to over 2 points. It's actually been 2.1, 2.2. And lenders again are citing the fact that the bond market is unstable, so they don't want to really lower rates. Our real 5-year interest rate right now should be below 3%. Based on historic spreads and based on where rates are right now. but rates are currently 3.39 to 3.59, roughly. Now, what's going to happen? If you have a variable rate at, say, prime minus a quarter, if rates slide down to that, and you're at 3% right now, you're going to have a variable rate of about 2.75 for anybody that's new looking at variable rate mortgage. I did a study, and I did a study for one of the TV show that I'm doing on CKWS, and I looked at mortgages for the last 10 years. And I looked at somebody with a mortgage of choice in 2001 between a fixed and a variable, and what would happen to that same client if they renewed in 2006, 5 years later. So the client that actually took fixed over that period for their mortgage averaged 5.65%. A client that had a discount of 0.5 point below prime during that particular period was at 3.65%. Now, the difference was very significant. On a $200,000 mortgage, it made about a difference of about $43,000. So anybody that's been variable for the last 10 years has done extremely well. But for new borrowers right now, it may be that they look at this 2.75 if we go to prime minus a quarter, and they look at where fixed rates are right now, and there's not as much of a spread as there was in variables to fixed. So it might be a good choice for them to look at fixed rates. And the other thing is, people may want to start looking perhaps at locking in. Maybe. I'm not saying, because depending on the discount that you've got and where you are, you may want to take a look. But to look at that, one of the best things I think I told you about in my last video was the inflation hedge calculator. And the inflation hedge calculator can allow us to take a look at your mortgage, where you are now, where rates could go, what your payments are right now, how well you're doing on your variable, and even put a plan in place to hedge against future rate increases. So I've started doing some of those sessions now, and if you want to get in on one of those sessions, you'll see my contact information at the end of this video. Please feel free to contact me. A couple other things. Hockey Day for the United Way. I said we were going to do that in my last video on September the 17th. Unfortunately, we had to cancel that because we didn't have enough registrations. With people getting back into hockey schedules, there's a lot of people playing, so unfortunately we had to cancel it. Sorry we couldn't do it. We thought it was a great idea, but we just didn't get enough registrations for it. And my series is called Mortgage Straight Talk, this video that I send out to you. I'm developing a video series called Mortgage Straight Talk, which is going to be a lot of the secrets, a lot of behind-the-scenes things that we really don't have a lot of time to communicate to you. Secrets maybe the banks don't want you to know about mortgages, about how they work and how we work. Some tips on how to do things differently, tips for first-time buyers, and so on. So if you're interested in that video series, again, you'll see a YouTube link to that at the end of this video. And if there's anybody else out there that you know that is currently in a mortgage and would like this information, please feel free to share that link with them. If there's anybody else out there right now that you know that has a fixed rate mortgage that is either coming up for renewal or in the middle of their term as well, it's probably a great idea to take a look again at where you are right now, see if it's worth paying a penalty, and see if it's worth converting your mortgage to a lower rate. We're in a very low rate environment right now. We don't know how long that's going to last, but certainly right now it's a good time to take advantage of it. That's it for the update for September the 15th. Again, if you have any questions, please feel free to email me. It's a few days left in summer. It's getting a little cooler. We're getting into fall, and thanks for watching.